Hello everyone, and welcome back to Explain the Charts. Today is November 7th, 2025, and we are diving deep into one of the most talked about stocks right now, Amazon, ticker Amazon. The last couple of weeks have been an absolute roller coaster, with massive news driving the stock to all-time highs, followed by a sharp and sudden pullback. So, what's really going on with Amazon? Let's first break down the incredible news cycle that has surrounded the company. The biggest headline is undoubtedly the blockbuster deal with OpenAI. Amazon's cloud division, AWS, secured a deal worth nearly $38 billion to provide the cloud computing capacity for OpenAI, strengthening its position as a dominant force in the AI space. This news came hot on the heels of a stellar Q3 earnings report at the end of October, where Amazon crushed expectations. Revenue was up 13% year-over-year, and more importantly, AWS sales growth re-accelerated to 20%, its fastest pace since 2022. The market reacted with extreme bullishness, and we saw analysts from major firms like Wedbush and UBS raising their price targets significantly, with some now aiming as high as $280. Interestingly, alongside this positive news, the company also confirmed 14,000 layoffs, a move framed as making Amazon a leaner, more efficient organization. Despite the overwhelmingly positive news, yesterday the stock took a nearly 3% tumble, closing at $243.04. This has left many traders wondering if this is just profit-taking after a huge run-up, or if there's something more to be concerned about. Now, let's turn to the charts to see how this narrative has played out in the price action and what it could mean for the future. Looking at the daily chart, the story of the last 2 weeks is impossible to miss. Let's zoom in on the action since late October to really see the impact of these events. Here, on October 31st, you see this massive price gap up, with the stock jumping from around the $223 level to open above $250. This was the market's reaction to those fantastic Q3 earnings, and it happened on enormous volume, confirming the strength of the move. Just a couple of days later, on November 3rd, we see another powerful gap up. This was the result of the OpenAI deal announcement, pushing the stock to its 52-week and all-time high of $258.60. This level, $258.60, is now the critical resistance level that bulls need to break to continue the uptrend. However, since hitting that peak, the price has reversed course. The last 4 trading sessions have seen the price pull back, culminating in yesterday's significant drop. This brings us to our first key support zone. The price is currently testing the area between yesterday's low of $242.17 and the top of that initial earnings gap, which sits around $244. This $242 to $244 range is a crucial battleground. If buyers step in here and the price holds, it could be seen as a healthy consolidation before the next move higher. However, a decisive break below $242 would be a bearish signal in the short term. Let's switch to the 1-hour chart to get a closer look at this recent sell-off. Here we can see the price action since the peak on November 3rd. It's been a clear downtrend on this lower time frame, with lower highs and lower lows. Yesterday's trading session showed persistent selling pressure throughout the day. There was no significant bounce, indicating that sellers were in firm control for the session. Now let's go even tighter to the 15-minute chart for yesterday's action. You can see the stock gapped down at the open and tried to find a base, but the selling pressure was just too strong, particularly in the afternoon. The final hours saw a sharp decline to the lows of the day. This short-term momentum is clearly bearish, which contrasts sharply with the overwhelmingly bullish long-term news. This is the conflict traders are dealing with right now. So, what's the game plan from here? Let's bring it all together with the bullish and bearish scenarios. The bullish case is straightforward. The fundamental story for Amazon, particularly its dominance in AI and cloud, has never been stronger. This pullback is a textbook case of profit-taking after an explosive move. Bulls will want to see the stock build a strong base of support above the $242 level. If it can hold here and consolidate, the next target would be a retest of the $258.60 all-time high. A break above that level could easily propel the stock towards the analyst targets of $270 to $280. Now for the bearish perspective. The immediate momentum is negative, and if the $242 support level breaks, the next logical target is a gap fill. Traders often look for prices to return to pre-gap levels to fill the empty space on the chart. In this case, a failure to hold support could see the price fall all the way back down to the $223 area to fill the earnings gap from October 31st. A move like this would represent a roughly 8% drop from current levels. Any negative news about the broader economy, such as the government shutdown concerns, could act as a catalyst for this type of move. So, to recap, here are the most important things to watch. Your key resistance level is the all-time high at $258.60. Your critical, immediate support zone is between $242 and $244. If that support fails, the next major support and potential target for bears is the gap fill level around $223. Fundamentally, the long-term outlook appears very strong, but in the short term, the price action is showing weakness. Given the powerful news, I'd assign about a 60% probability that support holds around $242, leading to consolidation or a slow grind higher. However, there is a very real 40% chance of a deeper pullback to fill that gap, especially if broader market fears take hold. The key is to watch if buyers show up with volume to defend this $242 level in the coming sessions. That will be your strongest signal for the next direction. Thank you for watching this analysis on Explain the Charts. Please remember, this is not financial advice. This video is for educational and informational purposes only. Always conduct your own research and due diligence before making any investment decisions.